And all information presented here is for educational and informational purpose only. It's not intended as financial advice. Always do your due diligence. I am obviously no expert. I'm not even a financial guy by no means. Literally just started to get my hands dirty in options. I was a penny stock trader and a stock trader for a very long time. Obviously, I look at stock charts and we do the live show and we go through the market, break it all down, pick out all the 100%ers and the poppers. But I wasn't an options guy before, and I had to pivot because the penny stocks are a completely different world today. You have to be up at 4 a.m. on the Webull or Webbull, whatever you call it, and be trading nice and early every single day and locking those profits in and pretty fast. They're not the same as pre-COVID and even during COVID. So totally different market. Obviously, you have to pivot with your life, and I had to kind of make a pivot. So, started to look into the options. Was told many times I should be looking at them, and I kind of just had to figure it out on my own. So, this is what I did, and I'll just kind of run through some information about options real quick, and then I'll run through the actual charts and the actual option chains and show you what I do. And again, I'm recording it. So I'm doing the show, the live show. So those of you that watch the video, check out the live show. We do it every night, every morning, 7 a.m. and at night, 9 p.m. on Twitter, X, whatever you want to call it. And we break down the market. So here you go. Let's rock and roll. So here's my Dougie Fresh Options Strategy. I'm not sure if many people trade options this way. I have no idea. It doesn't seem like it's very common from the people I've spoken to. So let's go through it and I'll tell you what's happening and we'll go through some basics real quick. So obviously you want to know the difference between your calls, your puts, your strike price, and your expiration. Your calls, you think that your call is the option you think it's going to go up or the price is going to go up. Your puts, you believe the price is going to go down. Your strike price is where you believe the price is going to get to. For example, and I'll just use basic examples. Apple's at $100. You think it's going to get to 110. That could be your strike price. You think it's getting there. And then I'll explain what I do. You could pick that 110. I would not. I would do it a little differently and I'll discuss that. But I just want to tell you that's your strike price. And obviously your expiration date is when your option will expire. So it does run out of time. And once you're out of time, it's gone. So if you're not up on it, you will lose whatever the investment you put in. And that's what you will lose on a straight call or put option. If you do naked straddles and crazy other things, which I am not familiar with, obviously the risk is a lot more than what you just your initial investment. So I do not mess with any of that stuff. And again, I'm brand new at it, and this strategy that I figured out has been working great. There hasn't been any that I haven't hit for over 150%, and most of them go way over. There was two that I lost out on, and that was the Apple earnings. If I would have just picked an extra week, it would have went into the money with no problem. I won't play earnings. We learned that real quick. And the other was the Yang. And honestly, I was up on it, and I didn't know. I wanted to wait and see what happened as it got closer to the expiration date, and it just pulled back just a little bit. And honestly, it just decays and like basically vanishes. And I'll go over that in a minute as well. So that's your expiration date and what you want to understand. So, of course, you want to start small. And I was telling you guys, I was starting small in the very small options. I was not doing Meta and Google to start and learn how to do this because they are expensive. Not crazy expensive, but they're a lot more than a $10 option. So you want to do them small, get the hang of it, and see what's going on. So obviously, that's where you want to start. Very, very small and just one contract. You don't want to try to get crazy. You're trying to learn how to do this and go into it knowing that it's a risk. Options are a little riskier than stocks because you have that expiration date, so they can expire on you. And but you're going into it knowing it's a risk. But again, you're learning this method and seeing how things work. That's exactly what my mindset was. So I was perfectly fine with not hitting every one. And again, I ended up doing extremely well in 2 to 3 months of just learning how to do it. It was kind of insane. So, and I showed you guys and told you every night about it. So it's not like I wasn't telling and, going along. And as we went through it, I was mentioning everything. And again, I was saying I wanted everybody to learn how to kind of do this and start knocking them out and start locking in the profits. And again, we literally called the I mean, the Trump assassination attempt days before that happened, the election, I mean, perfectly for 3+ months. I mean, nobody else was saying it was going to be the biggest landslide in our country's history like I was adamant about it. And then called all that stuff. And then again, we just nailed the entire market. And then I got into options and started nailing these things. So we crush the market. We look at everything. Not only that, we also look at events and aerospace defense. We do everything. So we understand exactly where we're at. And again, you want to limit your risk and you want to start very small. So you want to start in the very small ones and that's where you start learning. And again, it's okay if you lose a couple dollars, but you don't want to be shooting into Facebook or Meta and losing a bunch of money, a couple $100 trying to learn. So definitely always start small and anything that you can afford to lose because that's the way you look at it. And like I said, you always think in your probability and risk. So make sure you're always thinking that way. And of course, I think it's easier with the options with the expiration date. And I'll tell you why in a few minutes. But with that probability and risk factor because it gives you an expiration date. You know you have to sell it, and I've kind of I don't know exact if this is perfect, but I figured out between 4 and 6 days out from the expiration date, preferably about 4 or 5. That's where they're really paying the most. As you start getting closer to it, again, it decays. If you hold it too long, and you want to avoid holding like these short-term options too close to the expiration because it decays and it accelerates very rapidly. And that's what I was saying about the Yang. I was up on it, and it was like a Wednesday. It was up like $100. It wasn't anything crazy. It was a smaller one anyway, so it wasn't a big deal. And it was up. And then Thursday came, it was still up. And then Friday it came and it just pulled back a little bit. I don't even think it was down, but generally these things I've noticed to really be in the money, you pick your strike price and then you really want to get through that price, and that's where you really start making your profits. And this thing, the time just the decays. It just, it's going to expire at 4 o'clock. And yeah, it just went right down to like nothing. I was like, wow, that was amazing. And again, I didn't care. It was more, I could have sold it Wednesday where I had been doing it. And I literally said, I'm just going to see what happens when it hits the expiration date. Do you want to wait for that date or do you want to get rid of these things earlier? And I was just experimenting, and I still am kind of experimenting with a few little things, but I have it pretty figured out, like I said, and at least I think I do. And of course, I'm going to keep learning as I go along, but I just wanted to share this with you and again, make the video so you guys can see what I'm talking about and just explain them. So that you definitely have to be careful with the expiration dates. You do not want to get too close to it. So I had no idea and I learned. So now I pass that information off to you guys. And again, I just tell you my experiences, and that's why I did it and kind of why I wasn't saying anything before. I was experimenting with a lot of different things, and I was telling you, I wanted to figure out what the most profitable thing is, what the most profitable trades are going to be for them days or that week. And if you can just nail them and trade them smart and kind of load into it, load up on them, if you're that confident, you're going to make a bunch of money. Trust me, it's crazy. So the next thing is avoid over trading because again, you want to stick to your trading plan and avoid chasing trades. If something's up and you're not comfortable with it up at the top, watch for the next one that's getting set up. It's not worth buying these options when they're up at the top, and unless it's like Tesla and it's going like 40, $50, like it's a no-brainer. But that's not always the case. So avoid chasing them because if they do pull back on you, again, you have an expiration date. So you want to be finding them bottoms. And that's why I'm calling out the bottoms of things and you get as close as you can. Obviously, when it bottoms out, it generally doesn't come back down there, but you can see where your pullbacks are and you're watching on your red days for exactly that. And you're buying on these red days. They're the days you want to buy because then the next day it's green. You're immediately up on it. So you just want to think that way. You don't want to be buying them when they're up and they're green because now they have to keep continuing that momentum unless it's like a Tesla or a MicroStrategy. You're pretty confident with it. So all the big caps that I've hit have been down at the bottom, had expirations, and I've sold them. They've even gone higher, and it was perfectly fine. Again, I had expirations on them, and now I'm even seeing like you buy them. You set your expirations about a month out. Then, if you're really confident it's going to keep going, you have more 2 months out. So you start stacking them like that, and then you can really start crushing it. So you can do that as well. So again, I've been experimenting and seeing where the best where you got to be at for your expiration because I have no idea to get the most, just basically squeeze the most profit out of these things and still be safe. So that's what I've been learning right there. And again, avoid over trading. You do not have to trade a bunch of them. With these options, it's so easy. You just pick a couple of them, and I mean like one or three, one, two, or three, and just have that quick rotation going. And you've seen I posted, and I have only posted like the Google, a few of them, and you can just see the profits are insane. I mean, I'm running up 800 percenters in a week. I mean, it's absolutely insane. And you're talking to someone that hit penny stock 100 percenters. I mean, you guys know I've called so many that in 3 years I called enough in 3 years that it would be one a week for every week for 4 years straight. I did that in less than 3 years. So I mean, I've hit a lot of big penny stocks, and to see these kind of percentages on big caps, and it's so easy, it's just mind blowing to me. I mean, it's just absurd. So again, avoid over trading. Just pick the ones that you're real confident in and rock and roll them. Another very important thing, guys, if you really want to get successful at trading, and I had to learn this myself, journal every single trade that you're going to make. Record, like write down why you entered a trade, your strategy, what exactly you're looking to get out, and your exit price. Try to figure them out and stick to it, even if it's going higher. Again, you've heard me say on penny stocks, 100% they hit it. I've learned you're selling, and if they're going soaring while you're trying to sell, that's called a bonus. And you can do your 80/20, of course. Obviously, with options, you're buying one, two, or three. You can sell two of them, hold one for longer. You can do it that way as well. But again, journal your trades and make sure you're paying attention to what you wrote down because you had a clear mind. And as that thing's going up, your emotions start getting involved. So you want to stick to that trade. And again, if it went higher than what you thought it was going to, now you're in bonus land. Take them bonus profits and take them and lock them in, guys. Don't think that everything's going to go to the moon. And again, with the expiration, it's great because it almost tells you, yo, you have to sell it around here. It's going to be the most profitable. If it dips that next day, you're screwed. And you don't want, there's your risk and probability right there. So that's where you start thinking, really, I'm just going to sell it. It doesn't matter. If it goes up more tomorrow, it's only going to be a little bit more at this point. It's not going to be that drastic because I doubt it's going to run another $30. It doesn't look like it. And I've already squeezed out so much of it that I don't need to take the risk. And you look at it like that and you just start locking these things in. And I'm talking, again, you can have 10K days. When you're locking in 10K days, just think about it. You do 10 of them, just think about what you just made. So, and I'm doing them experimenting, guys. I'm not even putting much money into these things. Like I said, I'm used to trading heavily with penny stocks. So for me to be doing this, it's just like crazy to me. It's mind blowing. I'm telling you guys, it's mind blowing. And that is why I am sharing everything with you. And I tell you everything. We do the show every night and you guys hang out and we all love it and it works out well. But I've been telling you I was going to do this and I figured it would just be best if I just rock and and rolled and did it on the show. And like I said, I'll just cut this portion out of the video and make a quick video. So yeah, make sure you journal your trades. Obviously, pay attention to your commission fees and them things. Make sure that you have, your brokers with your low fees because you got to pay attention to that. And always be disciplined and stick to that trading plan. So, obviously, they're your option tips right there, or things to know. But again, really just your call and put, your strike price and expirations. There's a bunch of Greeks. I don't know what the heck they call it. Delta, Gamma, Theta, and Vega, I think they're called. And honestly, I really have no idea what they really do. I looked into them before. I don't even pay attention to it, but it kind of means nothing to me from what I've been seeing. So I'm just putting that out there. Maybe they do mean something. I just haven't seen anything for it. So it hasn't helped me any. So that's all I'm just saying. And so yeah, I just wanted to put that out there because they seem to be very important and people follow them, but I haven't paid attention. So here we go. Here's the good part, guys. And when you watch back on the video, this is what you guys are going to enjoy and actually care about. So let's just go through the Mag 7 and just talk about if we were looking at options and doing them. So Apple, here we go. We'll start with Apple, AAPL. I break it down. I bring up my charts real quick. I always do that so I know exactly where I'm at before I go into it. We're at 251. 250 in the after hour. We're just going to act 251, it says. So we're at 251. I brought up my Robinhood Legend right here. It has the option change. I was looking at MicroStrategy. Let me change it back to Apple here. And let me put Apple in. Here we go. Here's our option chain, and I'm just going to explain it. And again, you guys will be able to see it. So first, you pull up your whatever stock ticker you're looking at, and you're in your option chain. So Apple's what it is. And all right, I was seeing if I could change the thing from being dark to white, but whatever. So Apple's what it is. 251.21 is what it says. And then you come down here and it looks all crazy, and it looks like a bunch of numbers. You have like 660 plus 212, 8,050, 24, and then a price of 640, 670, a strike at 240. You're like, what the hell is going on? Obviously, the bid and the ask. You have all these things, the last, the net, the volume, your bid, your ask, your strike on the left side. Then on your right side, you have it again. So what you're looking at is, and your price is at 251 here. So our price is right here at 251.21. So anything below it is going to be, if you're in a call option, you're going to think that you want it to go higher. So you believe the price is going to go higher than 251.21. This is how I look at Apple. That's where the price is. So my strike price, I look at it really simple. It's 251.21. I don't know why I'm going to try to get to 255. I have no idea why. It's a little bit cheaper. I mean, you can see when you look at the asks and the bid pricing, they're definitely a little bit way cheaper, like half the price. And even if you went down up to 257, it's like a 25 center as opposed to 143. But guess what? I'm willing to pay that higher premium just knowing that we're going. I think Apple, and I'll look at the chart. So ready, I look at the chart, I pulled it up. Apple, you're going to get it to squeeze up to 255. It has that momentum. And hypothetically, I'm not saying that you want to do exactly these trades. I'm just doing hypothetical things off the chart to show you guys what I'm looking at when I do it. So hypothetically, Apple's at 251 or 251. It was on here. What was it on the Robinhood? I got to know the strike price, 251.21. So that's where it is exactly. So I'm looking at this thing and I'm like, yo, this thing's definitely going through 255. I'm not saying it is, but it should anyway. But when I'm looking at it and I'm confident, I'm like, damn, that thing's blasting off. It's definitely going through this price. I go back to this thing and I look and I'm at 251, right? I'm like, why am I going to pick 255 or 257 to get it cheaper? I just picked 252. So it's at 251.21. I go down to the next one at 252.50 and I click on this green thing right here. And you click on that, it pulls it up. It says buy to open. If you click on the red one, it says sell to open. You don't want to sell to open, you want to buy to open. So there's a difference there. That's what these two differences are. That's why you want to make sure you're clicking the green one. And so I know that's confusing, and it's right under the bid and the ask. So you're pretty much going to click on that ask. If you can, I'm doing it now. You click on the bid one, it pulls it up and it says buy, sell to open is what it says. And where you pull it up, and then you click on the green one, it'll say buy to open, and that's what you want to do. You want to buy it to open it. So you're buying an option to open basically, a contract. So that's what you want to do. So then you look at these things, and that's I'm just explaining that for you, and then you're at your strike price. That's what I look at. The most important thing is you come up here to your expirations dates, and there's going to be a spot on your platform, and right here it's right underneath the ticker basically, or the volume and the list. You just click on it, and it even tells you how many days out you are. 4 days. The next one is December 20th. I don't want to be that close. It's almost pointless to do that. It would be insane, because again, you want to be selling it basically 4 days out, 5 days out. So that's way too close, right? 11 days, I'm not that confident with. 18 days, still not really that confident with. January 10th, which would be about 25 days. Yeah, I'm pretty much 3 weeks to 4 weeks, but you know what? I'll buy myself a little more time because we have the holidays. And so January 17th, you're 32 days out. So in a month, I think Apple will go through 250. So now this you have to do this too. So when you pull up the expiration dates and them things, so now it changed. Now my closest one is 255 on that expiration date for January 17th. Now again, I was very confident it would go to 252. I would have picked that one, but that would have been 4 days out. That was you could have picked that to go up tomorrow and been 4 days out and sold it real quick. I'm not playing games like that. So my closest one's going to be 255, right? So I have to get through 255. We were confident was going there, and it's going to blast through that and probably do 260. So I'm confident with that. I click this green one right here. It's at $4, and it does say, obviously, I don't have enough buying power because I didn't put anything in there, but it says up here 1220, 250, 250 call, buy to open, $1.42, and then that's what you're gonna do. Let me click out that. Wait, which one did I click? Wait, I want to click that one out. Hold on. Let me click these out and do this over. Click that one. There we go. All right, I had two of them up there. That's why I was confused. So yeah, buy to open. It's 17 January 17, 2025, 255, $255 call. You put your order type in, your limit, and this is where you got to pay attention to. If you go on, you look over at your bid and your ask, and when you look at this, when it's at 255 as your strike price, and again, your expiration on Apple is January 17th, 2025, so you're 32 days out from now, and you need it to go to 255. You're at 251.21. We're confident it's going to do it. When you look at the ask price, it's $4. Don't ask me why. I still haven't figured that out. If anyone knows what the heck that means, I don't know. The bid price is $3.90, and the ask is $4. You can put that bid price in your limit. Put that bid price in, because a lot of times it'll hit it. You don't have to, if you hit market, it's going to run you up to the ask. Sometimes you're going to see like a 30, 40 cent difference between them bid and ask. Sometimes it can be $1. And if you set the limit low, you can definitely hit it. The same with when you're selling it, you want to do the exact same thing. You want to look at them bid and asks and get as close to the ask as you can, because they're going to try to sell it as low as you can. Laptop Travel saying yes, 100%. I learned the hard way. Trust me. That's why I'm telling you that. And it's very important. I had no idea. Of course, I sold the first couple market and just looked, and then I was like, wait, it told me I was going to make like $1,800 profit, but I only made like 1,400. What the hell just happened? And then I went back and looked and I was like, wait a second, I was supposed to sell at this price. So yeah, you're going to see these crazy spreads. And so you're always going to want to sell it in your limits unless like you're really, it's the end of the day and you need to get out of something or something like that where you're just like, fuck it, I'm hitting the market and it's fine. It is what it is. But you generally want to set your limit sells and again, look at your bid and your ask. So our bid is 390 for this. Your ask is $4. So I would set my price at 390. Set it down there. It's going to be a difference right there. And again, now hypothetically, we just bought one of these bad boys. I can't really tell exactly what it was going to cost. It would have probably been what, $400. Yeah, there you go. It's $400. So this is a $400 option right here. And again, you need Apple to go from 251.21 over 255. Again, you don't want to just hit 255. You basically want to get through it and then you're really in the money. So Apple's looking good. You're that confident with it. That's my Dougie Fresh option strategy right there. Like I said, I'm not looking and hypothetically, so we think that Apple's like going to go to 265. Just say hypothetically, that's where we think it's going, and we're at 251. And so hypothetically, I'm going the lowest I can, the very next option at 255, knowing it's blasting through that thing. Yeah, am I going to pay a higher premium? Again, it's $4 ask. The 260 call is 229, and the 265 ones $1.20. So you could see that I'm paying that higher premium. That's what I was talking about before. I'm perfectly comfortable with paying that premium because guess what? I don't have to risk or worry about it getting a 260. Now, I'm pretty sure if it goes up, you're still in the green, but it doesn't just like multiply. Like it gets crazy once you're in the money. And again, you're in the money once you get past that 255 because that's your strike price. So once you get past that, it just starts getting crazy. And then you get closer to the expiration. And as it's going up and closer to the expiration, these things are just like multiplying like you've never seen percentages before. And it's just wild. And again, you're only playing these like a month out. And I think we have an advantage because we look at the charts so well and we can kind of tell exactly what's going on. We know we're sometimes a month early. With the holidays, I'd give myself a little bit of extra space. And again, even if you sell it after 2 weeks and you still have 2 weeks left on the expiration, you're still going to make a fortune. I promise you. You don't have to wait to be 4 or 5 days out. I've just figured that's kind of like the most profitable you can be. But I'm telling you what, these things go up, they get in the money, and within 3 days after you buy it and you still have an expiration a month out, they're still way up. So that's how crazy it is. And again, that's just my Dougie Fresh option strategy. Nothing crazy. Most people will go through this Apple. The price is at 251. And again, hypothetically, we think it's going to 265. Most people pick a strike price at like 265 or 260. I don't understand why. I just don't get it. Again, it is cheaper, but I feel like it's way more risk trying to get all the way up there. God forbid it doesn't get up there by the expiration. You're not cashing out. I'm confident it's going through 255 without even a question. And again, generally these are like $1 or more. Like I said, I for whatever reason this one's like a $4 spread. A lot of them when you get up here, like it's crazy. I can't even believe it does it. It's like, yeah, you're at 251 and it's at the next strike price is like you're at 251.21 or 251.50, and it says it gives you a strike price of 252. I'm like, it's going through that in 3 minutes. Like, what are you kidding me? Here, I'll take that. And then the thing just shoots off, and then the next thing you know, you're in the profits and you're in the money, and the thing's just running up like crazy. I'm like, yeah, it was a no-brainer. Why am I going to wait for it to get to 260 when I know it's blasting through 255? So it's just the way I taught myself, and it's funny because I tell you, I talked to several hedge fund guys and other people in the market, and most people are they go through financial classes and this is what they do for a living. So they've been taught by somebody. I just kind of learned myself and figured it out. And And it just seemed the most logical way to me. I mean, it just seemed like it was like kind of foolproof. Like, let me just be smart about it, hit the next price because I know it's going through. And when I started seeing these percentages, I was just like, this is freaking crazy. Why would I ever pick a higher price than this? That doesn't even make sense to me. And apparently, everybody's picking higher prices. And again, you get it a little cheaper. I'm not worrying about it being cheaper because I showed you guys the percentages and what these go up. And that's why I did post a few of them just to give you a quick idea. And I've never seen anything like it before in my life. It's insane. So that's all I'm doing. And I can go through one more real quick. I certainly will. Let me just pick another one. What we'll do Google. No, let's do one that's gonna run. Which one's about to run? Um, they all are. Let's do Tesla because the thing's like an animal anyway. So let's look at Tesla. It's crazy. So here, TSLA. We'll pull it up. I pull up my charts, but that would be an Apple. And again, these are hypothetical, so don't trade what I'm telling you tomorrow because I'm just making up the numbers are the prices, but I'm just making up where they're going. So just to give you an idea. So here we go with Tesla. It closed at what, 270 something, 272. So I know it's at 272 in the after hours, or 472. I'm sorry, 472.51. That's what it was in the after hours. That's my strike price right here. And if you go into here, it has my expiration dates. And again, for the 20th of December, 4 days. I'm going to click that down. Let's go out to 39 days out, January 24th. We'll pick that, okay? And so Tesla's at 472 and hypothetically we know it's going to 500. So that's hypothetically we're saying it's at 472. We're confident that it's going to 500. Yeah, see on the Robinhood on E-Trade it gives you tighter spreads. I think every platform's a little bit different from what I've seen. And so yeah, these are like, so this is at four. This is like $5 spreads. My E-Trade, I'm telling you, it gives me like $1 for everything. I'm like, that's like I'm gonna be through that in 2 minutes. Here, let me buy that right now. How many can I grab? That's how I look at it. I'm like, this is insane to me. Like they're even offering this to me, and yeah, it blasts right through the freaking thing, goes right up. We know when it's going up. It's not even a question. So anyway, Tesla 472.51. My strike price or my expiration I have on here is January 24th. So we're 39 days out, and the next price it gives me is 475, 480, or 485. At 475, my ask is 39.55. At 480, my ask is 37.60, and at 485, my ask is at 36.15. So that's where your asks are. Your bids are going to be obviously a little lower, and so I'm confident 475. We're going to nail that bad boy. I'm going to, what did I just do? Something crazy. Yeah, no, here we go. 475. I'm going to click this green thing on the left. If you do the right side, that's your puts. So your left side's your calls. It says it up here, calls. This left side's your puts. And if you thought it was going down, you do the same thing. You just come onto the right side over here on your put side, and it's at 472.50. I would pick the very next one at 470. I'd pick that green one, 45.75, and that says buy to open, and that's going to be a put. But again, I haven't even been messing with them, so we're just going to stay on the calls. I just wanted to show you why the left was your call side and your right side is your put side. So you do want to pay attention to that. It says it at the top. Just wanted to make sure that was clear because I didn't make that clear earlier. And so if Tesla's at 472, again, we just looked at our asks and we know where our strike price is. We want to be at 475. We're confident it's going to 5. It's blasting through that. Yeah, it's going to go through the 480 and the 485, but it's definitely going through 475 without a question. We're probably in 3 minutes is what I look at it like. So I click this 39.55 one. That's the asks thing right there. And again, I know my bid is at 37.05. So I look over here and this one, and again, Tesla, they're not cheap. Tesla and MicroStrategy, they have built-in premiums because these things rock and roll. This is almost a $4,000 option. So that's why I was saying before, you don't want to be messing playing with like a Tesla to start out with, and you got to have 4 grand in your account to do it as well, and be playing with it. But anyway, I'm just showing you examples. I'll even go through like space or something, a smaller one, just so you get an idea. But again, I was just showing you. That's how you see it. I would set my limit. I'd come over here to that 37.05. That's what I'd set my price to. And then boom, I'd buy it. And again, our expiration would be January 24th. We would need Tesla to get through 475. So that's all I'm doing, guys. And I'll do one more. Like I said, I'll do a small cap one. I'll just do space. I know they have options. AMC is actually a good one, probably. It's ready to pop. So let's look at AMC real quick, and we'll do that, and then we'll call it a night. But I'll make a video. Hold on, I don't know why AMC is not coming up. Here it is. There it is. All right. What's it say Mac for? That's weird. I have no idea why it says Mac up there. It shouldn't say Mac. What the fuck is going on? What's going on here? All right, let me pick a different one then, because it says Mac for some reason. I'll pick space. It says space up there. I know it's definitely that. I have no idea why it was saying that. Anyway, here we go. So we're gonna look at SPCE, break that down, and again, this is a smaller one, but definitely have. I can't even type. Hold on. SPCE, here we go. And again, I pull up my charts. First thing I do, I pull them up. I have to see where the price is. 657 right there, 660 in the after hours. It's curling up. It is looking great right there. Again, has your expiration dates 4 days out. The 20th, 11 days out to 27th, 18 days out to January 3rd, 25 days out to January 10th, 32 days out is the 17th of January, 39 days out to January 24th. And you can just keep scrolling down. You can go 760 days out to January 15th of 2027 if you want to buy options that far out. So they do have that price out there, but we're not looking at that again. We'll look at like 32 days. So we'll do our January 17th. Again, space is at 660. It does tell you right when you come up. It tells you where your strike price is, right at the middle. So you do know where you're at. And this one's perfect. So this one has their $7 strike price. We're at our expiration January 17th. You come down, I'll tell you what our ask is. So at $7, it's 59 cents. At $8, it's 35 cents. And at $9, it's 22 cents. We're so confident it's going to $8. This is all hypothetical, that we know it's going to $8. We're confident it's going to 9, and so I would pick the 7. If it's going to 9, I'm picking 7 at 59 cents. I click that bad boy, buy to open. It says space SPCE 117 2025, $7 call, buy to open, and then I look over here. It's actually a $59 option right there. So they're the ones you want to start with. Again, you can even find lower ones than this, but that's why I knew this one was a cheap one. I messed around. I played with this one for real. I traded it all kinds of different ways, just experimenting with this thing up and down. I don't even know if I made money on it or not, but I did it like all kinds of different ways just because it was cheap at $59. It was like $40 here. I wasn't worrying about it. And again, I was experimenting, so it wasn't a big deal to me. But there you go. That's how you look at them. So this would be $59. And that's if you hit the if you hit it right now and bought it at the market. If you put the limit in and go down to 36, but again, here you go. Here's your bid and ask. Big spread, 36 cents to 59. You might not catch it at that 36, but if you put like 40 cents in, now you're at a $40 stock or a $40 option. It went down to $40. You may get that buy right there at that 40 cents. So again, it's the ask price. If you hit the market, it would definitely it would sell it to you at 59 cents. It's going to be at the highest. So look at it. You put your limit in and go towards where the bid is because it's going to be much lower. And you can go a little bit over that. And a lot of times, like I said, they hit with no problem. And the complete opposite when you're selling them, go and look at the bid and the ask. Go towards the ask, the higher, because if you don't, it's going to give you the bid and it's going to give you the lower price if you hit the market. So go towards the ask, the higher price. I was putting like the bigger caps over the ask and it was hitting them. like immediately. I couldn't believe it. I was like, this is insane. So it doesn't happen every time, but if it's really hot right like at that moment, yeah, you can put it over the ask and it'll execute it. It's pretty wild. So it so yeah, that's all I'm doing right there. And again, this would be a $40 option right there. You can buy one, and your expiration would be January 17th, 2025, and you need it to go to $7. Space is at 660. So I mean, say tomorrow it jumps up to 750. You're in the money right now. And then it goes up to $8, $9, and that thing's cruising for you. And as it gets closer to the expiration, it goes up more. But again, you're not worrying about a week or two. If you're like a month or so out, of course it's going to be a little less profit. You're still not worrying about it. Trust me, these profits are pretty damn nice no matter where you're hitting them. And like I said, we've been zeroing in on these charts like crazy. We always do. And so we know we're about a month out sometimes. And again, like I said, like Google, for example, I have them expiring soon. I have a bunch of them. Honestly, I bought them in both accounts, and and I was kind of experimenting, knowing it was going up. The chart looked so good, so I did. I bought them. What I think I have expiring on the 20th, I think, and then January 3rd, and then I have more on like the 17th. I forget the exact dates of them, but you can even see in the one picture I just posted the two. Like I said, I have a few of them, and yeah, it's pretty wild. So that's how I started to figure out to spread them out a little bit more too, instead of just nailing them all in them 3 weeks or month and knowing that they were still going to run higher. I started to stretch them out. Let me buy 4 or 5 options and this one, three options here, and boom, boom, and stretching them out. So just a little experience of what I'm doing. Again, all information presented here is for educational and informational purposes only, not intended as financial advice. So always do your due diligence. And I am definitely not a financial guy. Just you guys know, I look at stock charts and started figuring out how to trade options on my own. And that is my Dougie Fresh Options Strategy. And like I said, I just picked the closest strike price and and try to nail it and just get the expiration date kind of down. That's the biggest thing right there. And you don't want to be too damn close to the expiration. I picked a few messing around like 2 weeks out, and they were just too close. They have to be setting up, running, and ready to rock and roll. And sometimes we look at them and they still are setting up. So you really have to be careful. And again, I'm confident with 3 weeks, 4 weeks, and if it pops right there, I'm telling you, they go up exponentially where you're not worrying about being 4 or 5 days out, which I don't even know if that's the perfect amount of time. It just seemed like that's the most profitable area that they had been in when I was seeing them and doing experiments. Between that 4 and 6 days of selling them was perfect. And I'm guessing if you sell them, it gives another person more time. I don't even know what the heck happens, to be honest with you. Again, I'm not an expert, never did any of this. No one ever taught me, so I'm just self-taught and just telling you my experience. So there you go, and that is my Dougie Fresh option strategy. So I hope that helped. Let me take some check out the messages and see if you guys are asking anything. Um, can I also create a chart of options? So a visual chart. Yeah, well, you're gonna see basically. I just ran through. I had my charts up, and then I did the Robin Hood. But I'm not sure if I'm answering your question, and I'll hit you up and make sure that I get the right answer that question the right way. And sure, I can. We can do anything right there. And here we go. Let me see. And Laptop Travels also said, make sure every option you're looking at has done a lot of open interest. But yeah, he's saying make sure that they have a lot of buyers and sellers like open interest in them. And again, the big caps are going to have them. If you're looking at some of the smaller ones and all like odd ones, off like oddball ones, yeah, you got to really pay attention to that because the volume will definitely be different for you. And again, you have an expiration date. It's not like a stock where you're like, oh, yeah, it's fine if it goes up. And, like today, TNXP, we were looking at that bad boy in October. But if you knew it was going to, it looked great. But if you had only picked a month and it took 2 months, then you got beat. So you got to really be careful with that, and that's why it is a tad bit riskier with them expiration dates. And again, you can go a little further out and be perfectly fine with the profit percentages. So, but yeah, definitely got to make sure that there's buyers and sellers for sure. Um, let's see. Can you do call options on TSLR or T? That I'm not exactly sure. I did them on AAPU. I know that. I didn't do every single ETF. I was gonna try to mess with it, and I will definitely, obviously. But I'll try them out for sure. We'll try out all the ETFs and see. I knew AAPU worked. What other ones? I think I did the SMCI one, and did I? No, not Snow. SMCI. I did another one. I forget which one it is. I'll have to go back and look at my notes. But yeah, I did a couple of them, and but not all of them. So I'm not even sure, to be honest with you. There was one that I couldn't buy. So I know exactly what you're saying. And I have two accounts. One of them I have a Merrill account, and they're a little more stricter with options than E-Trade. So E-Trade's pretty simple with it. Merrill with the ETFs, they don't allow you to buy many of them, so they seem to be too risky. And so yeah, but E-Trade is perfectly fine. And again, I did try a few of them, but not all of them. So I'm not exactly sure, but I'll mess with them and see which one's for them. And let's see. Um, Let me see. Laptop Travel asked if when determining my strike price, do I look at the premium differences between the different strike prices and the premium to the current market price for the individual stock? So I'm always looking for a sweet spot. So in your example of Apple, I may take a higher strike. Yeah, and see that's some people that, and again, that it seems like that's a lot more common from what I've been talking to a ton of people. It's funny, I was at a bird kids party this weekend, and guy I start talking to is a financial dude that worked in hedge funds for 20 years. His wife is literally the finance teacher at my daughter's school. So we sat there and talked for an hour and a half, and I was just picking his brain about options because I was kind of telling him. And he was like, "Yeah," I told him what I was doing. And he was just like, "Dude, I've never heard anyone do that before, but that's a great idea." And I'm like, "I don't understand why anyone doesn't do this." And so, yeah, I have no idea. Again, I have no idea if it's normal or not. I don't know, but it just seemed like the most simplest way to me when I was trying to learn how to teach myself. And it just seemed dummy proof to me. I'm like, well, I know it's going through that price. I'm fine with paying more money. And remember, I was saying that I was paying a higher premium. I was fine with it because I knew it was going up. And when they go up, you make a lot of money. So I wasn't worrying about forking out and a couple $100 or whatever it is for the premium to be up a little more when I know it's going to come right back to you and this thing's jumping through the moon. So I just don't understand. But again, I never worked in the financial industry, not one day in my life. I don't know how these places really operate, what they really do, and how these guys really trade. I'm just telling you that I tried to figure this out on my own, and this is how I figured it out. So, and I was telling this guy that, and he was looking at me like I was insane, but he's definitely, he might even be listening. He said he was going to listen. So, if he is, what's going on? He was a great dude to talk to, very, very cool guy. And we had a good time talking at a kid's party about stocks for like an hour and a half, 2 hours. So yeah, that's but I was asking him questions, and again, it doesn't seem from everybody I talk to, no one seems to trade options this way. Everyone seems to pick the strike price all the way up and try to nail it. And I get it is much cheaper of an option, but you still got to get to that price. So again, I just something that I've discovered. I don't know if it's the greatest thing ever or not. I just know I've been locking in big profits while these things are moving right now. And I can imagine you do the same thing with putting them. When they're going down, you do the exact same thing, and they're pretty much money. I haven't done any, and I'll definitely do one real soon just to give it a shot. So there you go with that. Let me see if oh, Luis Rodriguez said he split the difference between the bid and the ask generally to get filled. And yeah, I've seen that many times. Like I said, don't hit the market price and definitely go towards your bid price a little bit and see if it fills up. If it doesn't fill, you can always change the order and make it a little bit higher for you. But you always try to get that lower price. And sometimes when they're on fire, sometimes they will just execute right there at that lower price. And the same thing with selling them. You want to sell them as high as you can. So you want to go towards that ask or yeah, the ask and make sure that you try to, stretch them out as far as you can. You might not get all the way up there, so you drop it down a few cents. But again, you're not the bid. And for example, like space, your bid and ask is 340 and 375. That's a huge difference right there. And the 5 hour one is like 146 and 203. You're talking over 50-cent difference there. That's a big difference when you hit that button and it sells it all for you. And you thought you were going to make this amount because it's up a lot, but yet they just sold it for you at the bid price and not the ask. So it does make a big difference there. And but yeah, split the difference and again, these are things that I was just kind of experimenting with like space and these smaller ones. I had no idea what I was doing. I'm not going to say I have any idea what I'm still doing, but I'm just telling you what I do now, and you guys see I'm super honest about it all. I post the stuff and tell you, and I don't even post them all, but I'm telling you the profits are insane. I've never seen anything like it, and we're going to destroy the stock market in 2025 and crypto. So that's why I definitely wanted to make this video. And I was just like, how do I get it to just flow right, just making it? And I was like, just do it on the show. I can always just talk on here with you guys on, and boom. So there you go. And anyone that watches the video, we do a live show every night and every morning, and you can come join us and we break down the market and see every popper. So there you go, guys. That's that. And let me see if I missed anything. I think I got everybody. Um, and yeah, you don't have to get so. And for example, but so laptop travel saying you don't have to get the strike price to be up on it, and that's true because I was up on one. I did pick Yang, and again, I was playing around with these things. I did pick it up a little higher so that I could just see what was going to happen, and it did not hit the strike price, and I sold it before. It was up a little bit, but again, I already know because I experimented with it, and so for that exact example right there, laptop travel, like you're saying, you're right. You don't have to hit that strike. It has to be higher than the price that you bought it in at, and a little bit higher up than that to, be in the plus and the profit because you're buying a premium. So you will see when you buy it, it could go down immediately because you bought a premium, and if it goes down a penny, you're going to see it go down. But it's not a big deal. But yeah, you're absolutely right about that. But again, I just see them right there and just pick them as close as I can. And once they get through the money, that's when they seem to like kind of multiply, it seems like. So it was just my observation when I was doing it. And I was just like, why don't I just pick them right here? And then I know I'm safe and they go through and then boom. And yeah, but if you do, say, for example, picked Apple, you had it at 100 and you picked the strike price at 110 and it made it to 107, you are not going to lose your money. You are going to be up on it for sure. You're just not going to be like astronomically up on it, like as if you picked right closer to the bottom of the strike price and it ran right through it. That's when you start running up. At least that's what I've found out experimenting. So I'm not sure if I'm 100% right, but that's what I found out. And it just seemed to be a cool method that I stuck to and started doing for the last few months. And like I said, I've been rocking and rolling these things and just loving it because it's like watching paint dry. It's so easy. These big caps are a piece of cake. They're way easier than trying to trade penny stocks, and the profits are even way higher. So it's almost like a no-brainer for me. So yeah, that's how it all started, honestly. And again, I couldn't be getting up at 4 a.m. I have a brain injury, so 4 a.m. I tried it like 2 days, and I was like, no, I just can't do it. It's too early. I just, it's just I need to sleep a little bit more, and so I wouldn't have been able to think straight to try to trade them anyway. So I was like, oh, I'm not doing that, and we started doing this. So. Luis Rodriguez said, definitely look at the price action in the option chain. You don't want to buy a contract with a low volume and an open interest. It's less likely to be profitable in the near term. Yes, you're absolutely right about that. And again, these are all things that I'm just kind of learning. So that's why I ask everybody if anyone wants to come on and talk about your experience or what you guys know. Feel free to hit me up and share whatever you want, but I definitely wanted to share this. And again, it's just my Dougie Fresh option strategy. I'm not sure if it's common. People do it. It just seemed logical to me, and it's been working out. And I can just tell you, just experimenting and learn how to do it. I made pretty damn good money. I'm not gonna lie, it was kind of insane, and in the last couple of weeks has been really crazy. And I'm like, wow, we're gonna destroy this market in 2025 and have a really good time together. So that's why I definitely wanted to get this done. I will have it edited and up so you guys can actually watch what I did instead of just listen to it and put the pieces together. So there you go, everybody. And if you have any questions, of course, hit me up. You know, if you DM me or send a comment, I answer everybody. I enjoy it. It's so much fun. I get a ton of messages, and I love to talk to everybody. So feel free to hit me up. And yeah, any questions, let me know. You know, we'll be on at 7 a.m. for a pre-market. We'll do our Jolie's jumpers, our laptop lowdowns, break down crypto and our big caps and see what's happening and what's going to be popping. So that's every morning at 7 a.m. And that will be tomorrow morning. So thank you everybody for hanging out tonight and tuning in.